Good evening, folks, and welcome to the Rahul Nair Finance Show. You're listening to the Daily Deal Room, from startups to stock markets, where we decode the business buzz of the day, crisp, clear, and to the point.
Today is September 3rd, 2025, and we are here to decode the business buzz of the day for you, crisp, clear, and right to the point. Before we dive in, just a quick heads up. This explainer is for educational purposes only. It is definitely not a buy or sell recommendation, so please always consult with a financial advisor before making any investment decisions. All right, so here's what's on the docket today. We're going to kick things off with the market's pulse, then we'll check out some key corporate moves. After that, we are diving deep into a massive banking deal, exploring India's huge bet on semiconductors, and we'll wrap it all up with the latest from the startup world. Let's get into it. Okay, first up, today's market pulse. Let's take a look at the numbers and see what kind of story they're telling us. So, the markets had a bit of a wobbly start today, but managed to pull it together and close in the green. The Nifty 50 gained just over 0.5%, closing at 24,715, and the Sensex followed a pretty similar path. It seems like investors were kind of holding their breath ahead of a key GST meeting, but, the overall sentiment held up pretty well, with midcaps and smallcaps also posting some really solid gains. Now, if you dig a little deeper into the sectors, it was really a tale of two very different markets today. On one hand, you had Nifty Metal absolutely soaring, up over 3%. But on the other side of that coin, the IT sector took a bit of a hit, dipping by about 0.75%. This really shows a clear shift in where the market's energy was focused. And of course, these big market trends are always a reflection of what's happening with individual companies. So let's shift gears and look at some of the key corporate moves that are making headlines. Man, talk about a contrast. We're seeing two completely different strategies play out here. In one corner, you have Games24x7, that's the parent of My11 Circle, and they're unfortunately laying off around 400 employees. This is a direct consequence of the government's ban on real money gaming, a move that has just sent shockwaves through that entire industry. Meanwhile, Zomato is making a proactive play to boost its bottom line. They're hiking their platform fee just in time for the super busy festival season. And now for what is arguably the biggest story of the day. We're talking about a massive, massive development in the Indian banking sector that has got everyone talking. So here's the headline. The Japanese financial giant SMBC just got the official green light from both the RBI and the Competition Commission to buy a huge stake in Yes Bank. This is a significant vote of confidence from a major global player, that's for sure. And the scale of this investment is just staggering, 16,000 crore rupees. That's about $1.6 billion, and that's just in the first phase alone. That amount of capital is a potential game changer for Yes Bank's whole turnaround story. But here's where it gets really fascinating. Even though this deal makes SMBC the single largest shareholder, they won't be classified as a promoter. So what does that actually mean? Well, in the Indian context, a promoter is a controlling owner with special rights and responsibilities. The RBI's decision here is super strategic. They want Yes Bank to get all the benefits of SMBC's foreign capital and global expertise, but they also want to make sure the bank remains fundamentally under local management and control. It's a really calculated balancing act. And the upside for Yes Bank is crystal clear. This infusion strengthens its financial position and boosts its ability to lend. It could also lead to better credit ratings and, get this, provide access to cheaper global funds like low-interest yen loans. It's a massive win. Okay, let's pivot now from high finance to high tech. We're talking about India's ambitious and strategically critical push into the world of semiconductors. And Prime Minister Modi really captured the national ambition perfectly with this quote. He called chips the new digital diamonds, framing this not just as an industrial policy, but as a matter of national prestige and economic security. The goal is clear: designed in India, made in India, and trusted by the world. And this isn't just talk. This is the Vikram 32-bit processor, and it's a landmark achievement. It's India's first fully homegrown space-grade chip. Now, why does space-grade matter so much? It means it's tough enough to handle the extreme conditions of a rocket launch, which makes it absolutely perfect for critical sectors like defense, telecom, and of course, our own satellites. And the government is backing this vision with a concrete plan and some serious money. We're talking 1.5 lakh crore for approved projects and a massive incentive scheme to bring in global players, all supported by a mission to secure the critical minerals needed. The goal is audacious: get mass production running by the end of 2025. Finally, let's zoom in on the startup ecosystem, which, as always, continues to be a hotbed of activity. Here's a quick look at today's deal flow. Seekho, a learning platform, pulled in a cool $28 million. Specialty coffee chain Blue Tokai Roasters brewed up a $25 million round to fund its global expansion. And Tuco Kids, which makes personal care products for children, secured $4 million. This just shows a strong investor appetite across really diverse sectors, from ed tech to coffee to consumer goods. So as we wrap up, I'll leave you with this question to think about. We saw a massive deal signaling the revival of a major bank and a strategic leap towards self-reliance in a critical technology. Which of these two monumental shifts do you think will have the bigger impact on India's story over the next 10 years? And that wraps up today's episode of the Rahul Nair Finance Show, brought to you under our daily series, The Daily Deal Room. If you liked this episode, please don't forget to like, subscribe, and share it with friends, colleagues, or anyone interested in business and investing. Thanks for tuning in.